How do appraisal gaps work, and when does it make sense to offer them? What an appraisal gap is where you're purchasing a house for, let's just say, $100,000, and then the appraisal only comes back at $90,000. So now we have a gap between the purchase price on the contract of $100,000 and then what the house appraised for, $90,000. So the bank is not going to loan on $100,000 if the house only appraises for $90,000. Appraisal gap coverage is what you're saying as the buyer is, I will cover that difference in cash. Two types of ways that I think about when I'm going to offer an appraisal gap. One of them is if you have a large down payment. If you have a large down payment, there's essentially zero risk, because let's take that $100,000 house as an example again. Let's say you're putting $50,000 down and then you're borrowing $50,000 from the bank for your $100,000 purchase. Now the bank is going to say, well, we're not going to loan on $100,000, we're only going to loan on $90,000. So then we're going to take $10,000 of your down payment and we're going to move it and pay it directly to the sellers at closings. So now you're only giving the bank $40,000 as a down payment. They are still loaning you $50,000 for that $90,000 that the bank is willing to loan. Then you're adding the additional $10,000 on top directly to the sellers, and they still have a $100,000 purchase price. So the deal did not change if you have a large down payment. Now, if you were only putting $10,000 down, we can't move that $10,000 directly to the sellers because the bank is going to require a down payment of some amount. Right? If you have a small down payment, that's where we really need to have a conversation about how much cash do you have on hand. Can you cover the down payment and cover the appraisal gap?